Good evening. In today's session, let's discuss regarding BOP. It stands for Balance of Payments. So, hope you all remember that a few days back we have discussed regarding balance of payments. And at the time, I also told you one thing very clearly that BOP consists of two parts. One is current account, and the second one is the capital account. Hope you all remember this. So there is a difference between current account and capital account. And in this session we are going to discuss regarding current account alone. In the next session we are going to discuss regarding capital account. Why capital account in the next session is because in the next session we are going to discuss regarding FDI, foreign direct investment, and that is directly associated with the capital account. That is the reason why these two aspects we will be discussing in the next session. And in today's session, let's focus only on the current account. In this session, we are going to discuss regarding what is the balance of payment. Of course, you already know this one. We will be discussing regarding current account. We will also try to know what exactly is the meaning of current account deficit. We will be knowing what exactly is the meaning of the current account surplus. All these things let's try to understand and we'll continue our discussion. Now, when it comes to, before going ahead, I would like to say few things to you. Of course, you already know. But for some of you, I want to make it some things very clear. So for example, you, myself, and everyone has got bank accounts. In one bank or the other, we got the accounts. And those accounts are called savings accounts. Meaning, whatever we are earning, instead of keeping that at home, I am keeping in bank. Meaning, I am saving that in bank, and on those savings also will be getting the interest. Of course, many people may not be happy with the amount of interest that we are getting, but there is a process, and we'll be getting interest on that one. But when it comes to my savings account, so generally, we'll make some operations, for 100 rupees, transactions in hundreds or thousands. But when it comes to the lakhs and crores, that cannot be done through the, savings accounts. Because, the income tax department has given clear instructions. RBI has given clear instructions to the banks saying that whenever the transactions in any savings accounts are going beyond the specifications and limitations, that must be intimated to the IT department. Income tax department must be intimated. Because, in the savings accounts, we cannot expect big transactions every day. But when it comes to the current accounts, larger transactions are very much permitted. That is the reason why business establishments will have something called current account. All their payments will happen through that account on day-to-day basis, and all their the earnings will also be credited to the same account. Clear? That is the reason why if it goes into lakhs and crores also, nobody will bother, because that itself is related to the business. So that is the difference between current account and savings account. But when it comes to the transactions between India and some other country, which we call it balance of payment. So the transactions between India and some other country, that should also be reflected in an account, and that account is called current account. As I told you in the beginning, current account is a part of the BOP, and other part being capital account. That we'll be discussing in the next session, I told you. But when it comes to, the transactions between India and some other country, they are reflected very clearly in the current account. So by looking at the current account, we can say very clearly whether our current account is a surplus or our current account is deficit. What do you mean by this? Right? So we know the meaning of the budget deficit and budget surplus. So the same meaning, surplus and deficit, we are also applying here. We'll try to understand. See, for example, from India, we are exporting our goods and services to some other country. When I am exporting, I am selling my goods and services. So when I'm selling my goods and services, I should be paid. So the other country is paying India. So India is earning on its exports, and those earnings are credited means deposited into our current accounts. That is the reason why. So when we keep on increasing our exports with respect to goods and services, the our account will be credited with more and more money. In the similar manner, when we import goods and services from some other country, we have to pay them. Clear? So when we are importing means we are purchasing, we are buying, for that one you have to pay to some other country, and that will also happen through our current accounts. Am I clear? But when we are importing, we are paying. Instead of crediting, we are debiting the money that is present in our account. Meaning our exports will lead to credit and our imports will lead to debit. Am I clear? Right? So now we'll go a step further and discuss. For example, if our exports are more than the imports, then what is happening? So our earnings are more than expenditure, then it is called current account surplus. If it happens other way around, like our imports are more than the exports, then our payments are more than our earnings, and that is called current account deficit. Clear? And that is, whether it is a payment or earnings, that is reflecting only in the current account. That is called current account. Apart from this, what are all present in the current account? Let's try to understand, and please pay attention here. Look at this. As I told you just now, the current account may be positive. When I say our current account is positive, that is nothing but surplus. What do you mean by this? Surplus means our exports are more when compared to imports. But at the same time, you have to take the time period into consideration. That time period is generally, as you know, 1 year. That's it. Is that okay? So in 1 year, in one financial year, what are our exports? Clear? Whether it is positive or not, meaning our exports are more than imports, so we are earning more than our spending, then it is called positive. That is nothing but the surplus. If it happens other way around, our imports are more than the exports, then we have to shell out more money. Is that okay? So when it comes to earnings, our expenditures are more, that is called negative, and that is called current account deficit. Am I clear? Very, very, very important. One simple question may be asked in the examination. Current account deficit means, current account surplus means, right? Very, very important. What happens if India's exports are more than imports? Right? Whether it leads to current account deficit or current account surplus, both, none of the above, then you should be able to answer this very, very clearly. If our imports are more than exports, then what happens? Right? That is the reason why learn the subject, and the question may be in any form, you will be in a position to answer it very clearly and very closely. Clear? So this is how you need to learn the subject. Clear? Now, yes. So now let's go ahead and discuss more. Right? So the meaning is simple here. Positive means the country is a net exporter. Negative means it is a net importer of goods and services. Clear? Kindly remember this one. Very, 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 very important. Now let's go ahead and look at the more points. So when it comes to the current accounts deficit, so this may be structural and this may be cyclical. Right? So if you have the structural deficits, so that will lead to more losses. But cyclical is very, very common. That is the reason why every time we cannot see our economy is booming. Every time I cannot say my exports are higher than the imports. Clear? That is cyclical. because you may be ready for more exports. Is that okay? You may be ready for more exports and you are ready for less imports, and you want to keep your current account as a surplus. There is no problem at all. But when you are trying to export more, where are you exporting? You are exporting to some other country or countries. But what is the guarantee that country or countries may be ready to import from you? Am I clear? That is the reason why the economic situation in one country will affect the economic situation in other country also. Am I clear? That is the reason why every country's the structure will be cyclical only. Sometimes the economy is at a very very high level, and sometimes it comes down, and sometimes it may go further low, but again it will come back over a period of time by taking certain measures by the government of the day. Am I clear? Now let's go ahead and discuss more points on this one. Look at this. So when it comes to structural, what do you face? Under investment. Low investment means low productivity. That's it. So right, low investment, low productivity, very less number of goods and services available, and that will lead to inflation. Since you're all following my classes from class number 1 till today, then you should be able to understand these points very clearly. Low investment, low productivity will lead to higher inflation, right? So then that will lead to inadequate research and development, and also inadequate innovation. Where is the chance to grow? And that will also lead to the emergence of the lower cost competition. Clear? And that is also not good for any economy. Clear? Next. So when it comes to the cyclical, overhauled exchange rate, boom in domestic demand, recession in key export markets, slump in global prices of exports, increased demand for imported technology. Very 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 important. These are all the things that will occur during the cyclical happenings. Clear? Similarly, when it comes to I told you this point, when you look at the balance of payment, one half is the current account and other half being the capital account, otherwise it is also called a financial account. Is that okay? When it comes to the capital account, let me tell you one point here because the point is available. It measures the cross-border investments in financial instruments and changes in the central bank reserves. Clear? Very very important one. So that is the reason why when it comes to the capital account, that is more related to the FDI. If we are attracting FDI, that will be coming into a separate account called capital account. But with respect to transactions between one country and the other country, between India and other country, those are reflected in the current account. Am I clear? So BOP means one half is the capital account and other half is the current account. In this session we are discussing regarding current account. With respect to capital account, we'll be discussing in the next session. Clear? So the current account measures imports and exports of goods and services, number one. Number two, payment to foreign holders of a country's investments, payments received from investments abroad, and transfers such as foreign aid and remittances. All these are the part of the current account. Very 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 important one. Current account consists of which of the followings? They will give you all these. Please identify correctly and go for the right bubbling, and you are going to get a mark. Am I clear? This is point number one. Next one, very 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 important one. Kindly remember all the points very clearly. Look at this. Another important point, my dear friends. Exports are recorded as credits. Please note down. And in the balance of payments, exports are recorded as credits in the balance of payments, while imports are recorded as debits. right? So when I say credits or credit, we are adding some amount to our account. Is that okay? When I say 25 lakh rupees have been credited to my account, 25 lakh rupees have been credited to my account means, so for whatever the money I have added 25 lakh rupees more I am gaining. But when I say 25 lakh rupees have been debited from my account means I am spending. Is that clear? In the similar manner, if you look at the balance of the payments here, when we export we are crediting money. When we are importing we are debiting money. Hope you understand this one very clearly. Because when we are exporting we are being paid, other country is paying, and that money is deposited into our current account. That is nothing but that money is being credited into our account. Am I clear? But when we import we have to pay, we have to spend. Where from you are spending? You are spending from your current account, and your current account is getting debited. That is the reason why in the balance of payment, when you mention about the exports, they are nothing but the credits. When you are mentioning about the imports, you are mentioning about the debits. Am I clear? Kindly remember these points, very, 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 very clear. Right? Next, let's go ahead and discuss more points. Similarly, when it comes to a positive current account balance indicates that nation is a net lender to the rest of the world. Why? It is a positive current account. We have surplus. Then obviously, so we are in a position to give. While negative current account balance indicates that it is the net borrower. When do we borrow? When do we ask someone to give the loan? When we don't have the money. When we have surplus, we are in a capacity to lend. Is that okay? But when we are in deficit, we ask money from others. In the similar manner, a positive current account balance means we are in a position to lend to other countries. But when it comes to the negative current account, so we will become the borrowers. Is that okay? Current account surplus increases a nation's net foreign assets by the amount of the surplus, while current account deficit decreases it by the amount of deficit. Is that okay? So obviously when it is surplus, we are adding. When it is deficit, so we are losing. Am I clear? Next. So every point, my dear friends, you have to remember for the examination point of view. Similarly, when it comes to trade balance, as you know, this is nothing but exports minus imports. Is that okay? If exports are more, right, then obviously that will lead to surplus. If imports are more than exports, that is leading to deficit. Similarly, since the trade balance is generally the biggest determinant of the current account surplus or deficit. Important point, please note down very clearly. Which of the following is the the biggest determinant of the current account, right, surplus or deficit? That is nothing but the trade balance. The current account balance often displays a cyclical trend. As I told you, that is always a cyclical trend. During a strong economic expansion, import volumes typically surge. If exports are unable to grow at the same time, the current account deficit will widen. Very, 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 very important one. So when we are planning for the expansion of the economy, definitely that will lead to more imports, right? But when we concentrate only on the more imports, and if we don't concentrate on increasing the width of our exports, that will create imbalance. Am I clear? Importing is not bad, not at all bad for any country, my dear friends. Every country, including United States of America, will also include the biggest economy in the world. right? So when we increase the imports, you should also increase the volume of the exports only to make the trade balance. Am I clear? Very, very, very important. Conversely, during an economic recession, the current account deficit will shrunk if imports decline and exports increase to stronger economies. Very, 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 very important point. So please remember this. Clear? So in this session we have understood regarding what is balance of payment, what is current account, what is current account deficit, what is current account surplus, when it is called positive, when it is called negative. All these things we have understood. The only thing what we left in BOP, the other part of the BOP, is the capital account, that we are going to discuss in the next session. Thank you so much, and I wish you all very, very good luck.